Hey guys, Mike here. So if you saw my regular video, you know, to me, this is the most anticipated earnings week probably in the last 3 to 4 years at least. I mean, there is a lot riding on this. The pressure is huge. Obviously, there's a lot of downward selling pressure in the market right now. And so these companies, especially the big mega cap companies that are reporting this week, need to hit those numbers and give good guidance, or at least give realistic guidance. So, you know, I want to go over a few things to be looking at in the companies in particular, because you could see some major volatility, major swings, depending on how these particular earnings come in, because it is loaded this week. So if you're getting out of it, hit the like, subscribe button, notifications all, really appreciate it. And let's get into this and start looking at some of the companies that you need to pay attention to this week. And so Monday we have a lot of earnings, but Tuesday is where the game really starts. And you know, after close, you're going to hear from two of the FANG stocks, Microsoft and Alphabet, parent company of Google. And these are really going to set the tone, right? Because Microsoft's already down a decent amount. Alphabet is not. And so what you're looking at is, you know, Microsoft has a good CEO, good CFO, and they're going to let us know how the PC business / software business is going, as well as, you know, they got the security now, they got the cloud going on. So we can see what, not only do they hit numbers, but what is the forward guidance. I think that's what you're looking at for both these companies. And if either one miss or both miss, or the, you know, street just doesn't like their guidance, then, you know, watch out down below, because they're already at certain particular levels, or we'll see where we're at on Tuesday for that matter. And then you have Visa, right? One of the biggest payment processors in the world, and we're gonna get to see how much money people are really spending. Are we still throwing the credit card down everywhere we go, spending more, spending less? Also, we get to see how Russia and Ukraine are affecting them, because Visa disclosed last month that 5% of the total 2021 revenues came from those two countries, as well as MasterCard calling both those countries a big contributor as well. And so we get a lot of good information out of that one. Obviously, I don't own either one of those companies, but if you do, I want to pay attention to that as well. And then, of course, Facebook. You know, Facebook, I don't know what to make of this one. I don't know how they're going to hit earnings, but then again, you know, we remember what happened last time with them. They absolutely fell off a cliff, as you can see. You can see 23% after the last earnings call, and then it just kept on falling all the way down to 42%. But if we go back, looking at their all-time high, you can see they're down 52%. The stock has been cut in half, which is just absolutely amazing when you think about it. But that's going to be a big one to see. I mean, they've already dropped so much, you don't think they can really affect the market that much. But, you know, then a big one's going to be PayPal. You know, all the fintechs are going to depend on this one. If you're in any fintech, I don't care whether it's Square, Lending Club, SoFi, whatever, if this one goes down again, then, you know, you're going to see all the rest of them follow, because they trade in tandem and stuff. And you can see this stock right here has been absolutely just obliterated. From its all-time high, it's down 72% since last July, which is just amazing. And the big thing to watch is the levels that it's at. These are major levels going all the way back to 2018. It is at the level it was on the 2020 crash right there in March. And so it's going to be interesting to see if it can fall below that, because if it falls below that level, then, you know, watch out below. And then, of course, Pinterest. And then you got Twitter on Thursday, but this is going to talk to us about ad revenue, right? I mean, that's why these companies are making a lot of their money. Twitter, for example, I'm not going to touch with a 10-foot pole, just because I'm scared of Elon Musk's tweets, because even if they miss numbers and guidance and everything else, I believe he'll come out with a tweet saying, hey, I can buy it now for even cheaper, and then it's going to go back up. I mean, he just has so much power with his Twitter account. It's unbelievable. And so, you know, we'll get to see on this one. I mean, Snap missed earnings and said a lot of their advertisers had actually paused, you know, working with them and stuff. And guess what? The market didn't care. It bounced back from being 15% down in after hours to being up on Friday, when the whole market was just a bloodbath. And so with these, there's no telling, but that's what you want to watch out for on that one. MasterCard we already talked about. And an interesting one is going to be McDonald's. This one I'm looking at more to tell me what's going on in the economy, right? Because when you see, if people are spending less at the fast food restaurants or more, that's going to let us know how the consumer is really looking. But also for the earnings here, they have a big part, almost 9% of the total revenue is from Russia. And so since they stopped operations at the beginning of March, they're going to lose roughly $50 million per month. And so it's been 2 months that we know of. And so their guidance is going to be very interesting to see. Also, Domino's, another one. how many people, how many pizzas are people buying, right? That's another thing to look at. And so these two I just want to look at more as to how the consumer is doing, how they're able to pass on the extra cost, because it definitely costs a lot more for pizza and for a #1 combo at McDonald's. Okay, it's almost twice as much where I live at. And so, and then you got the big dog, Amazon and Apple, right? I mean, these two right here. Apple, which I talked about in my earlier video if you didn't see it, I mean, it's only down 9% on the year, which is just mind-boggling. Everything else is down way bigger than that, but it just hasn't been affected. It's at a key support level now. We'll see where it's at on Thursday. Amazon, of course, this one right here, I'm not expecting to have great earnings, and I said this in the video a couple weeks ago when I talked about it, and when I talked about their stock split. And it's because really not only did they miss revenue last time during the fourth quarter of 2021, but it's also because of the gain they reported on the Rivian investment they had, which now has been cut in half. And so they reported last quarter a profit gain of almost $12 billion from its investment in electric car company Rivian. It was over $100 a share at that point in time. That's been cut in half. And so that's going to be interesting to see how it weighs on it, along with the other investments it's made as well, which should be cut in half. And so I'm not really hopeful that they're going to report very well, but the one thing I'm looking out for is e-commerce, right? I want to know how much e-commerce is growing, how much people are spending, are they spending more, how their growth rate's looking. That is key right there, and one thing I'm really looking out for this one. Roku is going to be the streaming networks, right? I mean, Netflix got crushed, and all of them sold off after that just because of Netflix. So it's going to be all about the subscribers, right? How much are they growing the subscribers? Are people still subscribing to Roku? Are they cutting them off, trying to cut and save costs? I mean, what are they doing? So that's going to be big time. Obviously, this stock has been absolutely crushed. I mean, it's down 79% since last July. It is down to the levels it was back in 2019. It has not quite hit its 2020 low back in March of 2020. So, you know, if it reports bad numbers, that's where you can see it going. So, you know, that's a nice little drop all the way down to the 70s. And so we got to watch out for that for sure. And then if you want to look at fuel and stuff, ExxonMobil, Chevron, all the gas companies are reporting on Friday, okay? And these stocks are up massively. And as you can see right here, I mean, both Chevron and Exxon, just for the year, between 30 and 35%. Since last October, between 50 and 65% up. So they've been crushing it, but I'm listening to them just to see where they look at as far as, you know, demand on oil, where they see gas prices going, all of that stuff. I mean, you get a lot of good information out of those earnings to see, and that has obviously, what does that affect? Inflation, right? So we get to see that right there. One I actually forgot was Activision Blizzard over here on Monday we can look at before open. That's just going to let us know if you guys own any gaming stocks, you know, Corsair Gaming, things like that. That could obviously let us know what's going on with the gaming. Are people still playing a lot of that, or have they finally moved on and decided to get out in the world and start doing something real or something? I mean, that's what we're looking at on that one. And another one to look at as far as like for housing is DR Horton down there at the bottom. It's going to report before Tuesday. And so that's going to let us know how much your input costs. They still, you know, having to pay a boatload to actually build these homes. You know, how's the demand on that? Where do they see the market going? And so that's going to be key, because that's another thing that has to do with inflation, right? And so these are key numbers and data we didn't know about. And I think DR Horton and all the gas companies can kind of let us in on that. And so there's a lot riding on this week. And so that's why I want to put this one out there to kind of let you know what to look out for. And I'm going to do some videos during the week, probably if I can, about some of the bigger earnings. But it's all about the mega caps, guys. That's what it's about. Those other stocks that are so beat down, either report bad earnings and sell off, it's just not going to affect the market anywhere near as much as the mega caps. I think Apple and Amazon, Google, Microsoft, all of those are it's just key, right? And I think a lot of people sitting on the sidelines just waiting to see, because they don't want to jump in front of the train, so to speak, what they're going to report, okay? But, you know, and I always said one of the best things for the market right now is for those stocks to go ahead and sell off and be done with it. Because if they can sell off and S&P goes into an actual 20% crash, so to speak, then I think a lot more people will feel more comfortable about actually getting in the market, believe it or not, because a lot of people just don't know. There's a lot of uncertainty, and as I said in my last video, if you look at the fear and greed index, it really isn't that low right now. It's not extreme fear, it's just fear, but a lot of it has to do with the mega caps. The other ones have already been beat down, right? They've already gone through their dot-com bubble type. That's what happened in the dot-com bubble. You know, you had when it burst, a lot of those stocks went down up to 90%. A lot of them went out of business, but went down 90%. Well, we've already gone through that. If that hadn't happened, I'd be a lot more nervous. But because it's all in the mega caps and that's all that's left right now, really to go down on the NASDAQ especially, then it is what it is. So let me know what you guys are doing, what you're looking out for this week, and if you like some videos like this, I'll definitely put them out. But then again, when are we going to have another earnings season with this much pressure on it? I'm not really sure, guys. So anyway, I hope you have a good one, and I will see you tomorrow. Don't forget to hit the like and subscribe button. I really appreciate it. It helps out the video and stuff. So I'll see you later, guys.